All right, so we're going to be back testing EUR USD from November 21st, which is Monday, all the way to November 25th, which is Friday. And we're going to be seeing how we could have traded this week using ICT concepts, or to my understanding of what ICT concepts are. I'm still learning everything that there is to know, so I'm not fully a graduated student. But here we go. So, as we can see here, the dark black line here is marking the 12 a.m. opening for Monday. And then as we can see here, we are now on Monday, and this starting point where the tan colored is, that is the London session. Right now we're in the 5 minutes. So as we continue to play data, we're going to be trying to see what we could have traded during the the New York morning session for EUR USD. And so as we continue to play the data here, we can see that we're still in London session because we're still in that tan colored area. As we can see, we have a line here that is marking the 12 a.m. opening, but horizontally, so that we can see where the discount and discount areas are. So as we continue to play data here, we are going to get into we have officially started the New York session with the green area being marked by the New York session. As we can see, as we continue to play data, we have this yellow line right here, which marks the 8:30 opening of the equities market. And so as we play more data right here, we can start to look at areas of liquidity that could have been taken out throughout the day, or that could be taken out during that were formed from London session. And that way we can see what trade we can take for the day. So as we can see, this is price right now. This is where it started. We have these London lows. We have this high for London. And so we're just going to keep an eye out for that as we see price develop. As we can see here, we have this low formed right here that gets taken out. And so I want to see what happens with that. And I'm going to go into the lower time frames to see how that develops. Now, the red line right here is the 8:30 opening marked horizontally. And below this, we're looking at a discount price. And so as we can see, right now we're in a discount market. And we just took out this low. So I'm going to go into the 1 minute and see that we have a high right here because we have the wick of this candle, and then a lower high, and then a lower high next to that one with this other candle. Now we took out this low, price went below it, and then we went above this high. And then as we went above this high with these candles right here, breaking market structure. And as it went up, we can see that it made a imbalance between this candle and this candle. So it would look something like this. Between that candle and that candle, there was an imbalance. And so price made the imbalance as it took out this high, and then it came back into that imbalance. And knowing that we are in a discount market, this could have been a buy. So right now, this is actually the first time I'm seeing this data, so we're gonna simulate that we're going in for a buy right here. and we're gonna see what happens. So I would have placed my order right there. Stop loss below this, which is a more conservative stop loss. It could have been right here for a more aggressive stop loss, but I'm gonna go right here. And then for targets, I'm gonna target this high right here, which is right above the equilibrium line, which would be sending price into a premium market if it did go above that line. So assuming that price is now here, let's just assume that we are tagged in, or we're in the trade now. So we're going to start playing the data, and hopefully we're going to see what happens. So initially it starts to go down into against me. And then we can see that it starts to go up a little bit. And then it goes up more. And then it starts to range. And then as we can see, it goes back into a loss, but then eventually it goes up into our target. Not hitting the target yet, as we can see here. There's still a little bit there, so we would just assume that we're still in the trade until it completely fills the whole thing. So it goes back down. And it goes into the negatives. Okay, so it almost reaches profit target, goes back into a loss, and then eventually goes back up, and then it hits the target. So this would have been the trade for Monday if I had taken that trade. As we can see here, this whole tan colored area, which is slightly different than this tan color area, which is more, this is marking the London, but this area more like an orange, actually orange or brown. We can see that at the start of it, this is 8:30, and then at the end of it, it's 9:30. So the stock market open, and so it would be around that time in the morning for the New York session where this could have been taken right after 9:30 opening, or actually right before 9:30 opening. This could have been a trade following those guidelines of a low being taken out, then this high being broken by these candles and creating an imbalance right there, as we talked about right here, and then price played out the way it did. So that would have been the trade for Monday. Now what we're gonna do is we're gonna continue playing price, and we would have just stopped trading for the day. I would just taken this and then moved on for the day. Now we're gonna keep playing price right now. Moving into Tuesday. So just a little explanation here. The blue, the baby blue color, that represents 12 p.m. to 1:30 p.m., which is when you would expect almost a mini reversal of price, or you would just expect consolidation, which is, that's why I just marked it there. Because so what that means is you wouldn't really trade whenever we are between 12 and 1:30 p.m. So that's what that's marking right there. And then we have the purple area, which is marking the New York afternoon session. So right from 1:30 all the way up to 4 or 5, I believe. And so then we go into the white area. So you can see this is the previous day right here. Same color scheme, but as we can see, the white area represents Asia session. So I'm going to keep playing the data, and we're going to go into the next day marked by this line. We're going to enter London session, and then we're going to start seeing the green, which is the start of New York session. Okay, we have the green, so we're going to jump right into price, go into the lower time frames with that. As we can see, we have the dashed line, which represents 12 a.m. opening marked horizontally. And so as we can see here, we have price now at morning session of Tuesday. Again, this is your USD. As we can see here, we have 8:30 opening marked by the brownish colored area. And as we can see now, we can start looking at London highs, which have a high right here. We have a low right here for London. And we also have some lows here, which were formed during Asia session. But right now, I'm just keeping an eye on this high and this low that were marked during London session. So as we can see, we're right here. We're going to start playing price. I'm going to the lower time frames to get more details. So again, this is the high that we're kind of keeping an eye on. And then this is the low that we're also keeping an eye on. So price is going down here. Goes into a premium market, then back down into a discount market because of this red line. 8:30 opening, red line marked horizontally. Below this red line, we're looking at a discount market. So we can see this low was taken out. And price continues to go down. And then we can see that low that I was talking about before get taken. Well, yeah, it gets taken out. Now we have to see what's going to happen. Since we are below 8:30 opening, meaning we're in a discount market and we have taken out this low, it's giving me signals of a potential buy because the liquidity has been taken out, but we'll see how it develops. All right, so right now I am on the 1 minute, and we can see that price is starting to consolidate here. And we're going to keep playing price. Right now we are between 8:30 opening and 9:30 opening. So what I'm seeing here is that we took out this low that was formed during London. We took it out. And then I can see here that we have this high with this candle right here. And then we have a high next to it, and then another high, a lower high next to it, and another lower high next to it with the high here. So that makes it a swing point. And we can see that price breaks above that swing point. And as it breaks above that swing point, it creates a imbalance right here between this red candle and then this blue candle. So I'm gonna mark that to show y'all. We have that imbalance right there. And then we can see that price does come back into that imbalance once it broke above this high with these candles. So I'm just gonna, if I were trading and I saw this setup with everything else laid out like that, I would most likely get in. So I'm just gonna get in just to see what happens. Or we're just gonna simulate that we get in here. So I would put the stop loss right below this low. Right below this low. And I would probably target this order block right here with this candle, which is right below the opening line for 8:30. But this would be a pretty good setup for me. So considering the reason why I put it up here and not down here is because since I already played this candle right here, it's showing that this is where we would enter. Because I missed that price already went down here. So now it's up here, so I would just enter here to make it fair. And so we're just gonna start playing data to see how this would have turned out for Tuesday's trading. So immediately it continues to go in our favor. It starts to go down a little bit, goes into a loss, goes more into a loss, and then starts to play in our favor again. Starts to come back down, and then it gets really close, so this might be a stop out. Goes back into profit. So we almost got stopped out, but it right after that it just starts shooting back up. And I believe that touched the target. Yeah, that touched the target that we were looking at. So we almost got stopped out, but it did end up hitting the target. And what's interesting is that it's also around the same time as Monday's trading, or the when we took Monday's trade in this as we can see, it was right after 9:30 opening. It was around 9:30 opening when we saw the same trade. We can go to Tuesday over here, and we see a similar pattern around 9:30. We get a setup that looks very similar. And so that would have been it for me. Just one trade and get out for the day. If it had been a loss, maybe I would have gone for a second trade, but we'll see what happens Wednesday, Thursday, and Friday. But this would have been it for Tuesday, and I would have just moved on for the day. So right now what I'm going to do is I am going to start playing data so we can send this into Wednesday's data. So we can see there we're going into afternoon New York. Now we're in Asian session. We have that line marking the new day. We have now entered London session. All right, so we're now back in New York session, morning New York session opening, around New York session opening for Wednesday for Euro USD. So I'm gonna go into the lower time frames here, and we're gonna follow the same ideas again. We're gonna be looking at London highs, which for me right now, this one looks something I would look for. And then this London low right here, something I would also be looking at. And so we're gonna keep playing the data here. As we can see, we have that 8:30 opening immediately. At this point, I don't think well, let's keep playing the data just to make sure, but we're seeing that. All right, let me just keep doing it here. All right, so we're going to a discount. We went to a premium. We didn't take out this significant high. We didn't take out this other potentially significant high. But we went up into a premium, but then as we can see now, we're going down into a discount. So we're gonna see how that plays out. All right, so what I'm seeing right now is within the New York session, we can see that high that was formed at 8:30 opening, it's been taken out. And not only has it been taken out, but we're also in a premium market because we're above opening price for 830. And as we can see here, we see this low with this candle right here. And then we see another higher low and another higher low next to it. So this makes it a swing point. And as we can see, these candles break this swing low right here. This candles break that. And once again, there's an imbalance formed as it breaks that low. Right there. Now, the only thing for me right now is that we haven't reached 930 opening. So the volatility that could come in for 930 could potentially swing above this high and take us out if we get into early. So this already looks like a good setup, but because of time, because it hasn't reached 930 yet, I would most likely wait. So we're gonna wait and see how it plays out. Maybe once 930 hits, we get another setup for a sell. But for now, it's too risky for the volatility that could potentially come in. Okay, so it did work out in our favor, but we didn't take the trade. Okay, so we've officially reached 930 with the close of this brown session. Once this brown session's over, that's the 930 opening. And so if we can see a sell setup, I would get in. So like this, 930 opening happened and it went back into the imbalance. So volatility from 930 opening with this candle and then goes back up. But then it touches that imbalance again, and now we're after 930. So now there's still that probability that we could now, or we could reduce that risk of high volatility to hit us again. And since we're back in that imbalance at a good price, I would get in. If I was trading for Wednesday and this is the setup that I saw, these were the, and we were following everything else that we talked about, and I saw this, I would have probably gotten in. So let's just say I did get in. Now I could have set up I could have put the stop loss above this high for a more conservative stop loss, or it could have also gone right here for a little more aggressive. Now I'm more of a conservative type of person, so I'm just going to put it above here. And for the targets, we have this low, which wouldn't be low enough, but we have this other low, which is very close to this and this. So all of these areas right here are liquidity. So I'm just going to target this low right here, just around the other lows as the target. And so right here, we would assume that we've already touched the imbalance and then we entered. So that's why I have to count the risk reward ratio right at this candle. And so we would assume that we're now in the trade. So let's just start playing the data and see how this would have played out. So initially it goes in our favor and then it goes back into a loss, touching that imbalance again. We see that it goes back in our favor and we get stopped out. Now the fact that this is a very big candle could have been that on Wednesday there were news. I would have to check that, but typically, yeah, this would have been some kind of news that just took us out. So for Wednesday, we would have had a loss, which is okay. If I were to get in again, it would probably be afternoon New York session, just to make sure that all the volatility is out from the morning, and only if everything looked good. For the New York afternoon session, I would get in again. So we're going to play data. We're just going to skip the whole morning with the loss, assuming we had one loss. And so we're just going to continue playing the data. We're going to go into that afternoon session. We're now going to revenge trade and try to get back in immediately because now we don't know the full story. We have to reevaluate the whole thing, all these highs, all these lows, just to make sure. And to get in again immediately would just be revenge trading at that point. So we're going to just start playing more data. We would just, in real time, we would also just be waiting for the afternoon session to start. So as we can see, we have this huge volatility that just pushed price up. And we go into that 12 p.m. all the way into 1:30. And then here we have, with the purple area, the New York session, afternoon. So as we can see, we get another big candle. Just from experience, I'm getting the feeling that price is just going to continue going up for the rest of the day. I don't see anything significant that could be taken out for a potential buy or a sell. We have this high taken out, but price just continues to go way above that. So honestly, I would just skip this day. Well, I mean, we already had that one loss, but I probably, just because of how I'm seeing data right now, I would just move on for today. Take that one loss for Wednesday. And so what I'm gonna do is I'm just gonna skip to Thursday, see if we see anything good for Thursday, and see what we do from there. So as we can see, the day's over. Well, New York sessions are over for Wednesday. We're going into Asia. We have that line marking the new day. We're now in London for Thursday. And now we're in New York morning session. So let's go back down into those lower time frames. As I look at London for Thursday, I can see this high right here as significant for me, and I can see this low significant for me as well for the London. So we're gonna start playing that data, and we're gonna just see how price plays out in that New York morning session. So as we can see, price goes into a premium market. This is 8:30 opening. Price is above 8:30 opening, so we're in that premium market. This is that high I was talking about, formed during London. 9:30 ends or starts. I don't see any. Personally, I don't see much that could entice me to get in. These very big swings don't really give me much information, personally. Okay, so now what I am seeing though is that, well, first of all, this high that I was talking about from London did not get taken out, but we see here that from those big swings, we do get one swing right here, which breaks this low and forms an imbalance right there. I'm gonna mark that. It forms the imbalance when it breaks this low right here. But we don't have that high from London being taken out, or any high over here being significantly taken out. We could say this right here was taken out, but personally I don't feel it that much. So I probably would not take this trade. It might have worked out, but just personally I would not take this trade for Thursday. Now it's marking 10 a.m. So it's almost near 12 p.m., which is when we go into, like, not always, but potentially a consolidation or a reversal. And so that's just another reason why I would probably not take it. Now, here's what happened. It did go in our favor a little bit. I would have probably targeted this low right here, and then set the stop loss like right there. Now, we didn't take the trade, but I'm just saying where I would have targeted, so just to get an idea. And it does go in our favor. So you can see entry. This would have been the target if we did take that trade. Now, I chose not to take it, but it just happens that it did work out, which is no hard feelings. We just know it's good to know that it did work out and that we were kind of on the right track for price action. But, you know, you didn't lose, which is better than not taking a trade. Sometimes it's also a win. In this case, it could have been a win, but we didn't take it, so we just move on. Now personally, I would just wait for, since we didn't take anything and we're about to reach that 12 p.m. session, I would just wait until afternoon New York, see if I get a setup there. So I'm just gonna play some more data to move into that New York afternoon session. Hopefully we get a setup there. So now we're in that New York, that purple area. This is that New York afternoon session. And as we can see here, we go down into the lower time frames here. We can see that these lows look significant that were formed. We take them out right here as we go into the afternoon New York session. And we are also in a discount from that 8:30 opening. Now what I'm seeing here is that we take out these lows with this swing right here. This swing takes out these lows, and price then goes back up, takes out this high. And the reason why it's a high for me is because we have this candle right here with another candle next to it. In this case, it's the same high. It's an equivalent high, but then we have a lower high next to it. So for me, this counts as a swing high. And it's a swing high that got broken by these candles right here. It got broken by these candles who took out these lows right here. So this high went below and took out these lows where there was liquidity, and then went back up and took out that same high right here. And as it went up, we see that it formed an imbalance right here. Now, if price does decide to go back into this area, I would be looking for a buy. And this would be my buy. This would be my trade for the New York afternoon session for Thursday. So we're going to see if price does go back in there. All right, so price does go back in there. And like I said, I would, if I was trading in live, if this was a live data, I would take it. I would have taken this trade just because everything looks fine to me. So I would have set the stop loss all the way down here. Again, I'm a more conservative trader, so stop loss all the way below this low, and profit targets either above this high or anywhere over here. Maybe even this high right here or this high, but let's just say this high right here. And so now we're seeing that we're putting our risk reward right at that candle, and we're gonna see how it plays out. So as we can see, it ranges in that area and then eventually just shoots up. Now it hasn't hit our target yet, but it's pretty close to it. Ooh, as we can see, it goes all the way back down. But then it starts to go back up again. And then it starts to go back down again. And then it starts to range. At some point even going into break even. Now this was a very close call to where it would have closed the trade. But now we're in the Asia session. And this trade is still going. So we're gonna see how this plays out. Eventually, you know, it gets so close, and yet eventually as price continues to go, it takes us out right here. Very, very close trade, but eventually it takes us out. And so this would have been Thursday's trade. And so what we're going to do is we're going to go into Friday and see how Friday would have played out. So that's Friday. That's Friday London. All right, so now we're in Friday New York morning session. And I'm looking at the same thing again. I'm looking at the significant highs and lows of New York, of London. So for Friday, it would have been this high right here and this low right here. So we have that 8:30 opening. We go into a premium market and then we go back down into a discount market. Now we're completely below that significant low from London. My thing is, we are below that area, but the issue is that we are not in a discount market for the 8:30 opening. So what we're gonna do is we're gonna see if there's a low getting taken out at 8:30 or below the 8:30. So something like this low getting taken out and then giving us a buy setup. I'm looking for something like that, but right now we don't see any of that. Instead, price just goes right into a premium market. Actually, now that I see, although I just played the price, although I mean I just played price, so I can't go back. But what I am seeing, and also would have been a little risky, but again, around 9:30, actually I completely missed this. But as we can see here, at around 9:30, which seems to be where the significant trades for me are happening. But as we can see here, like I said, we're looking for a high to get taken out on a discount market or below this red line. And we already know that we took out this significant uh London's London low. So now we're just looking for that buy. And I can actually see one right here, although I missed it but when I was playing price. But there's actually one right here. As you can see, we have this high right here that gets taken out by this candle. And as it gets taken out, it forms an imbalance right here. It forms the imbalance. It actually continues going up. And then it goes back down into that imbalance. And it doesn't stay there for too long. Right now we're in the 1 minute, and it's just one candle that touches that. And then from there, it just shoots up. So that could have been the trade, but we completely missed it. So we're just going to keep playing price. At this point, since it's already this high up and we're almost reaching that 12 p.m. area, there probably won't be another setup. And or if there is, I wouldn't be that interested because of that 12 p.m. time that comes into frame. So we're just gonna play price, and since it's Friday, we might just wait for that afternoon New York session, but we'll have to see if we get something there. So we get into that 12 p.m. all the way to 1:30 p.m. marked by the blue area, and the purple area marking that start of the New York afternoon session. So we have this New York afternoon session starting here. Now we are in a premium market because of that 8:30 opening down here. We're above that, so we're in a premium market. I see that this high got taken out. This high from London gets taken out with this. Price consolidates, and then we're gonna see if price tries to go down. Because we're in a premium market, so we're looking for a sell. We have a high getting taken out. We have this high getting taken out. We have this high getting taken out. So maybe if we see a break of structure to the down, we could get into a buy, but we would have to wait and see. So we're playing, I'm gonna just keep playing price. Not much action, more of consolidation. This is very just choppy consolidation. There's a lot of consolidation considering we're on the 1 minute. So this is already giving me not a good feeling on finding a trade. And as we reach that end of that New York area, we don't really see much. So I would just probably just call it a day and not trade, just because of how I mean, just look at how small these candles are, and these are the 1 minute candles. So yeah, there's literally no volume, no action going on here. Yeah, there's really nothing to see here. And we pretty much reached the end of New York afternoon session for Friday. And honestly, I think that would just be it for us. I have done this is what I would have seen if I had traded this week of from November 21st Monday all the way through November 25th Friday, this is how I would have traded. So just to recap, on Monday we had a good trade, 1.5 risk to reward, so that was a win. On Tuesday we had that 2.2 risk to reward ratio, which is pretty good. On Wednesday we had that loss, and on Thursday we had that loss. So overall it would have been a profitable week, just based on risk to reward and assuming we kept the risk the same for each day. It would have been a profitable week. And so with that, I want to conclude this weekly recap of Euro USD and how I would have traded it this week. So thank you guys for watching, and I'll see you guys in the next one. All right, bye.